Hello everyone, welcome to Talentious Corner. My name is Abhijit and you are watching a special video series on 15 investment options for every Indian. In this video, we are going to talk about fixed deposit as investment option. Without getting delay, let's go to the presentation and let's talk more about this particular investment option.
Fixed deposit scheme is a scheme in which you deposit lump of money called principal amount for a fixed time at a fixed interest rate. So for an example, you go to a financial institute, let's say it's a bank, you go with 50,000 rupee, you want to deposit it for next 5 years, then bank will say that, hey, for 5 years, we are going to pay you 6% per annum interest rate. And in that way, you are going to deposit your money in bank. If you talk about risk on fixed deposit, it is very less as compared to other investment options in market. You can opt for fixed deposit scheme from any nationalized bank or private bank, post office, and there are some financial institutes also who are offering fixed deposit scheme. To open a fixed deposit account, you need to deposit minimum 1000 rupee, and as of now there is no maximum cap on deposition. So when we talk about return on investment in fixed deposit, so you get a compound interest for fixed deposit. Let's understand this with an example. So for an example, you have 50,000 rupee and you want to deposit it for 5 years. You went to bank and bank said that fine, we will pay you 8% interest rate per annum. Same time bank said that we are going to calculate interest 4 times in a year. So your total return on 50,000 rupee after 5 year will be calculated like 50,000 multiplied by 1 plus, since interest is calculated 4 times in a year, so 8 divided by 4 will give you value of R divided by 100. You are depositing it for 5 years. In a year, 4 times interest is going to be calculated. So after 5 years on maturity, you will receive 74,297 rupee. When we talk about different types of fixed deposit, first type is flexible fixed deposit scheme. In this scheme, you can withdraw part of your principal deposit and you can earn interest on rest of the amount. For an example, you started one FD account with 50,000 rupee, and in between you realize that you need 10,000 rupee, and you went to your bank and you requested to withdraw 10,000 rupee from your FD principal amount. So bank will withdraw 10,000 rupee, and for rest 40,000 rupee you will be earning the interest. Second is saving plus account. So if you have a saving bank account in a bank and you want to move surplus amount to a fixed deposit scheme, that you can do with saving plus account option. Here you need to define what will be the term of your deposit and how much amount you want to move from your saving account to fixed deposit scheme. So for an example, you have 80,000 rupee in your bank, and out of 80,000, 50,000 you want to move for a fixed deposit scheme. You can request to your bank. Bank will do that. In this case, you don't need to do any kind of transitions. Bank will take care for that. On maturity, matured amount will also be deposited in your saving bank account. So this is the benefit you get when you take a saving plus account for fixed deposit scheme. Third option is deposit with overdraft facility. In this case, you can get overdraft facility against your fixed deposit account. You will be continuously earning interest on your principal amount. You need to pay back the amount you leveraged from overdraft facility. For an example, you have a fixed deposit with overdraft facility. The principal amount you have deposited is 50,000 rupee. In between, you realize that you need 20,000 rupee for certain work. So you can go request your bank that give me overdraft for rupees 20,000. They will give you overdraft. You will be keep earning interest on 50,000 rupee. However, bank will say that you need to return this 20,000 rupee in next 5 months, 6 months, and you need to pay certain processing fee. So this is an option or facility you get with deposit with overdraft facility. So fourth option is corporate and government bonds. So there are a bond issued by public sector companies, private companies, financial institutes, and governments. In those bonds, some bonds offer fixed interest rate for a fixed period of time. When we talk about risk, so here a certain risk is involved. So when you are opting for any kind of bond, you need to check what is the rating of that company, and if rating is higher, that company is better. So what are the points you need to consider when you are opting for a fixed deposit scheme? Number one, what is the rate of interest you are getting from that financial institute? Second one is, what is the penalty if you close FD account before maturity? What are the advantages of fixed deposit scheme? If we talk about, say, these options are safe and reliable, and these are going for a lot of years, so you can opt for this particular option. If you are going for saving plus accounts, or surplus amount from your saving account can be moved to a fixed deposit scheme. If you are a senior citizen, you will get high interest rate, liquidity is better, loan can be taken against FD, an amount up to 1 lakh rupee is insured by Deposit Insurance and Credit Guaranteed Corporation, also known as DICGC. So you get a low interest rate as compared to other investment options in market. Your money is locked for a couple of years. If you are doing premature withdrawal, you need to pay penalty on it.
I hope you like this particular video and you got some insight about this particular investment option. Please note this video is just for informational purpose. Before you opt for this particular scheme, please consult with your financial advisor. So for more financial information, please like and subscribe to our YouTube channel. Thank you for watching this video. Happy investment. See you in the next video.